Hey everyone, welcome and thank you for giving me your afternoon after some of you I know for a fact just left the live room. Let's see here. My name is Nick Shaheen, in case you're not part of the group, and we're here today to spend a few minutes talking about those large stocks. How do we handle them? But first, today is an eventful day, and it was a mess. So what ended up happening is people were shocked because we started out fairly green before the market opened overnight. And then it took off to high heaven, and then it came back to earth in a giant crash. So what I can tell you is that there were a lot of questions, and a lot of questions were basically saying, why are we falling? Instead of just jumping to why, sometimes the why is built into the charts. We'll get to that later if we have time. But for now, I want to welcome everyone again. What is the first on the agenda? I'm going to share my screen. And actually, I'll make the screen bigger. And just so we can recap, the members have been waiting for us to release release an event. So in case you don't know, we have one live in-person seminar a month, and we have, I can't do it, and we have sold out of our April, which was about options, and we have one that is coming up in May. And if you're sneaky, you can actually, if you see the logo up on the corner, the right-hand corner logo, not this guy, you can jump and log yourself into it. So we only have 25 spots. So this is the secret announcement. I've been dying to release it anyway. We have 25 spots. They sell out fast. The one we just we're having this month is sold out, and we already have some people asking as of yesterday to get on a waiting list. So I promise you, it's not a sales tactic that we sell out fast. What's going to happen there? I'm going to change your life in regards to charts. There are a few aha moments in charts that allow us to do what we just did on the screen. You see these downside arrows? If you were in the live room, you saw what happened. At one point here, somebody said, give us a trade. I said, okay, let's see what we can do. We looked at the chart. We drew a couple of lines, and I said, let's buy a put. The put went from $195 to $6,000, one put. Not a lot of people held it all the way. I believe a couple of people did. But the booking was a double or a triple or quadruple. Who's going to be upset at that? Nobody. So how do we do that? Very simple concepts in charting. If you're actively trading, or if you're investing and you want to bulletproof your prospects there, you need to know how to do the basic stuff. And the basic stuff takes a lot of work, but the practice. But the knowledge is very simple, but somebody needs to point it out. And we spend 2 days pointing it out. And a lot of eyeballs open up. So we've been doing these for almost 2 years now. And whenever we had our first charting event is when the team said, Arlenius and I were like, whoa, we saw some eyeballs open up today. And that was very rewarding. So we said, okay, we're going to do this one topic event. So if you're interested, jump on that, because they will sell out fast. So let me give you a link that you can get to. If you don't want to do a QR reader, you can get it on the website. And hi, Jafar. And hi, everyone else. Let's see here. Oh, beautiful. I'm trying to see the list. A lot of familiar names. Hi, Don. Hi, Raul. So the whole gang is here, and then a few names I don't recognize. Okay, cool. All right, so this is the announcement out of the way. I'll have another one later. And if you also are interested in the Discord, we can talk about that later. But the event is going to sell out quickly. I'm not going to have a counter. Last time we had a counter, everybody freaked out. But I know there are some people that are ready to hop on. I'm a total genius? Why? What did I do? Okay, good, good. I'll put it up there. Curious cat. Cool. All right. Okay. How do I chase big stocks? The um, the problem with them is they're good quality. Like today, I had a discussion about one of them. This is a big stock. It's near all-time highs. Up here, somebody wants to go long. They have the dilemma. So somebody that wants to go long, they don't want to be chasing. They don't want to get in late. That's a problem. We will have solutions for it. The other one is somebody's already long. They still like the position. They don't want to get out. They want to protect their profits. There are several things they can do. We will talk about that. And the cool thing is, if we can apply it to this chart, we can apply it to another one just like it. And we'll do a couple, and then we'll walk away with that knowledge. And it's a building blocks. I'm not giving you advice. This is not investment advice. This is me sharing my knowledge on how to use options to minimize exposure to mistakes. And so we can protect the stock if we're already long. Let's say somebody wants to short the stock. The discussion today was about somebody taking a bearish position on it. Okay, so how can we do that responsibly? So the options, luckily, they're fairly accessible. Almost all platforms have options, some better than others. Okay, so the way we can handle it is by first determining the time frame. So if I'm an investor for the long term, I would make slightly different decisions than somebody that's minute to minute. So I'm going to go from the assumption of somebody is looking to swing trade. I'm going to say 3 months to a couple of years. So let's address the first one. The first one was, do I want to go long? How can I do it without chasing? Well, there isn't a magic bullet for it, but there are ways you can minimize the chase mode. So basic conversation on options is having calls and puts. Most people know calls and they know how to buy them. And it's a simple proposition. You go in, you choose a call, you buy it. So if I'm an investor, I want to go out in time. All right. So it's going to cost big bucks on a stock this expensive. So you can minimize that by going into buying a call spread. This is the least aggressive way. So you buy a call and you sell a call. So that's one way to chase without a lot of money out of pocket. If I wanted to buy 100 shares of that bad boy here, it costs a pile of money versus getting involved with a small sum of money that doesn't cost a lot, and it gives me the opportunity to double my investment. That's one way to do it. I can, instead of buying shares, I can sell. There's no sound? Somebody else or just one? Okay. Instead of buying shares, I can sell puts. Now, we said there are calls. A lot of you also know that there is something called a put. Okay. So the put is, regardless of what the definition is, by selling a put, you would be committing to buying somebody else's shares. So this is not a bearish thing. Somebody owns shares and somebody else wants those shares at a lower price. So the first person owns the shares. They would like to keep the shares. They just want insurance. They want to be out of the shares at a certain level. Let's say 1,200 right here. And you would love to buy it at 1,200. Who wouldn't, right? Because that would be a dip of 8%. So what happens is they want to hold their shares but not lose more than 8%. You want their shares and you would like to buy them at an 8% discount. Then I can sell that put and I'm committing to buying their shares at a discount. So what happens? Let's say the stock falls, and this happens in the next couple of weeks. I wake up, I have their shares. So I pay 1,200 per share and I keep the premium they paid me. And the premium can be substantial for a stock this big. So let's say I collected $50 or $100, and that means my break even is even lower. So if I put the stock at 1,200, it'll be $100 lower than that when I start losing money. So that is a way to get long. Sell a put. So now we know buy a call is a way to get long. Sell a put is a way to get long. Combining both makes it a really cheap long. Why? If I pay $1,000, again, I'm making up numbers, to buy the call, and I'm collecting $500 to sell the put, I'm only out of pocket $500. So now I'm really long for not a lot of money. And usually when I say that, the objections come out and say, okay, you're locking up money for a long time. Yes, I am, but I would have locked up more money had I just bought the shares outright. So that's not a really valid argument. So that way, I'm chasing without chasing. Okay, that's one way to do it. Now let's switch to NVIDIA so we can change the conversation a little bit. By the way, today's bearish development on NVIDIA. If NVIDIA doesn't pop above 890, it goes much lower from here. We can discuss that in the live room tomorrow. Okay, so the second problem is, how do I protect profits? If my conversation that NVIDIA could fall a lot, oh my gosh, Nick just scared me. I need to buy some protection just in case. Okay. How do I do it? Again, we come into calls and puts. One way to do it is to buy a put. If you do it all the time, it gets expensive. So some people are allergic to buying puts. How come? Because they feel like it's wasted money. And to those people, I say, you waste money on your car insurance, on your health insurance, on your house insurance every month. And not one time do you say, gosh, dang it, I didn't crash my car. I wasted my insurance. No, it's part of doing business. Luckily, in the stock market, you don't need to protect it all the time. You need to pick the areas of time, the periods of time of uncertainty. Like right now, we are at all-time highs in it and in the market. We have a bunch of uncertainty. That would be a good reason to buy protection. And even then, it's pretty expensive. So if you're hesitant about wasting money on insurance, what you can do is you can buy a put that gives you the insurance, regardless of the level you pick at your own pace, and you can sell a put below it. So it's temporary insurance, not quite insurance. It's insurance for a little bit. Okay, that's one way to do it. Or buy a put and sell a call against the shares I own. And I can sell one call against every 100 shares I own. That's a method that's the opposite of the other one we mentioned, to where, yes, I'm buying a put. Let's say I'm spending $1,000 to buy the put, and I'm collecting $500 or $1,000 to sell a call. Then I'm out nothing. I'm protecting. So the risk is, if it falls, I have insurance. If it spikes, I continue to profit to a certain level, and then maybe I'm forced to sell my stock at a profit higher. And even when that happens, you can wiggle your way out of it most times. Okay, so this is basically buying insurance without much money out of pocket. And let's see here. This is also the doorway to the other conversation that I get asked all the time: the synthetic dividends. How can I create money out of thin air? I remember when Apple did not pay a dividend and everybody was on them. You got to pay a dividend. Why don't you pay a dividend? I was like, why do you care? Why don't you create your own dividend? They were like, what? Okay. So this part right here. If I own shares of NVIDIA, Microsoft, here, we can switch to Microsoft. The conversation go to Microsoft right now. This is the largest company on the planet. Check this out. T1. You want to learn how to draw these? I know where I can teach you. Join me. Okay. Microsoft, excellent company. If the stock market is higher in the future, they will be higher as well. There's no doubt, right? So you want to own it for the long term. And what you can do is put your asset to work by creating your own dividends. So the way it works, if I own 100 shares of Microsoft, I can sell one call. They're called covered calls. And the call would be at any level I want that is acceptable for me to lose my stock. What do you mean lose my stock? When I sell a call, let's say I sell a $440 call for out a few months. If the stock rallies through it, the person that bought the call from me may ask for their shares, and I have to sell them my shares at $440, which means from today, I would get the profit another 5%, and then a little bit more because I keep the money they pay me. I will become I basically, I'm promising I would deliver my shares at a higher price. So there's no loss for me. It's just I limit my position. That's all. And again, we can wiggle out of it should that happen most times. So this, in essence, gives me the opportunity to put my asset to work and collect a premium from somebody who wants to buy my shares. And if they don't take my shares, the premium stays in my pocket. So if you collect $1, that's $1 less from your cost, your entry cost in the stock. Let's say you bought it at 404. That means you bought it at 403 because you just made $1. And you can sell those weekly or monthly or quarterly or once a year. So the question is, how do I pick the right time? Well, it depends on you. If you're not a very busy person and you want to own them for the long time, go out to the end of the year and go up way above here and find a level that seems suitable for you. If 500 it is, if they pay you something for the 500, you sell that, you keep it. You can't sell your shares while you have that trade open. When you want to sell your shares, you should close that trade for a profit, most likely. All right, so that is a synthetic dividend. You create your own profits. So all three things involve the same strategy, selling something against an asset. So people buy stocks and they think that they're stuck. All right, you can do all these strategies that we said to put your asset to work. So then comes the conversation, but Nick, I don't have enough money to own 100 shares of that. I'll say, okay, but how are you long then? Well, I own 3 calls. Well, guess what? You can sell 3 calls against it. So if I own 100 shares, I can do everything I just said. And everything I just said also works on 100, a 1 call or 2 or 3 or 10 or 15. So you can do it via calls as well. And the concept works the same. Let's see. Let's pick another stock. Which other stock? Meta? Okay, Meta. Crazy stock. Wow. Okay, Meta. So let's say I bought 5 calls of Meta months ago and they're out to December. I bought 5 calls. So the idea is I have that asset. They're not shares, but when you buy a call, you lock your right to buy shares. So it's as good as owning shares in your platform's mind. So you can sell 5 calls against them shorter term. So let's say your calls are way out in time and down at this level. You can choose to sell some calls at this level for this week, this month, next quarter, or higher or lower. And what happens if they don't take your, if it doesn't go above here, then you get to do it one more time and one more time. And what happens if this happens? Nothing. You're long here, you're short here. Selling a call, and if you get assigned, it means you're short the stock. It means they said, uh-oh, you shorted Meta up here. Yeah, no problem. I'm long down here. You've got all these profits. So there's no lose situation except if Meta does this, and then you don't get out of your calls. That's a lose situation, but there's no upside lose. So if you wanted to stay long with your calls, you can decide to put them to work by selling calls against them. See, same concept. Shares, calls, it works the same way. All right, so I promised you 30 minutes, and I don't want to keep you long. Hit me with some questions while I loiter a little bit. So this is your chance to hit me with follow-up questions. I'm reading through and I don't see some questions. So unless you guys are all good with that concept. Now, please, now. Was that a joke? Or are you asking for now the ticker? Same works for puts. Yes. Yes, Al. So Al is asking, does that same thing work for puts? Yes. If I own a put, I can put it to, like, okay, good question, Al. I know what you're saying. Let's say I am shorting Meta. Okay. And I bought a put to short Meta. I can sell a put shorter term. So if I bought a December put or a November or May put, I can sell an April put against it. So this one, money out of pocket. This one, money in. If it doesn't do this now and it just slowly falls, this one dies in my favor and I still own mine. Yes, you can do that. And you can repeat it as frequently as you deem responsible for your time frame. Is that poor man's cover call? Oh, Terry, oh my gosh. Okay, so which is easier to say? A poor man's cover call or a calendar or a diagonal? Yes, that is what they refer to as a poor man cover call. But it's my grief. I don't like to call it that. It's not that easy to say. Poor man's cover call. Is it? How about a smart man's cover call? May class will be in Irving. Yes, right off the airport. Literally, like maybe 8-minute ride in an Uber or a shuttle. Charting event. Learn how to do these targets. Yes, that's what it's all about. It's all about have you understand the mechanics of a chart, how to read this W, for example, and how to make money off of it, how to find extensions, support and resistance levels, and you're walking away with free stuff if you use certain platforms. And I mean some gold. Gold. Listen, you won't be disappointed. I would be shocked. What's the best resources to learn credit and debit spread? Jafar, you have a library of videos. Tomorrow, ask me that in the live, and I'll give you a link to it. I don't have it ready here. I have 16,000 windows open. I'm sorry. You're here? What does that mean? Oh, you're here. You made it? Let's go. Waiting for some questions. Oh, whole bunch of you are here. I see what you mean. Okay, so we don't have 25 spots left. We have less, fewer. What's the goal? The knowledge, the knowledge you gain from a from attending a 2-day charting class with us. Oh, you want now? Okay, we'll do now. This wasn't supposed to be a charting session, but we'll do it. This here is a nope. This here is not an obvious point of entry. It depends on your time frame. You do have support and you do have a lot of resistance. I have no reasons to buy a call. You could convince me to sell a put, but not anything more. What is a good entry for MSTR and SMCI? Oh, man. Okay, let me check. I'm going to handpick the questions to make sure that we're staying on task. Okay, the problem with MSTR is it's completely dependent on the price of something they don't control. So as good a company it is, so I'm going to tell you that MSTR, if you have the money, if you have the account, the best way to trade it is to sell puts. It pays a huge amount of premium. And I mean like 90 grand probably per contract. If you want to buy it at half price out a few months. No joke. So that's the way to trade that bad boy. It's pretty risky. SMCI, not an obvious point of entry, but it is a good company. Its sales are good. On bad days, you can sell a put to own shares, sell a put spread to be long without having the commitment to own shares, sell a buy a call spread out in time, buy a call, sell a put, buy a call, any combination of those. This is not a good entry point. The markets have never been higher. This stock is close to its all-time high. It's approaching this bounce level of 875, which is super solid support. If for whatever freaked out reason they lose that, they will end up in the 700s, if not 680. So don't short it to 680. It has an incredible amount of support at 875, but it could lose it. So be careful. And whatever you do, I would do just half positions. Leave room to add later. Would you go bullish long via ZB bond at this level? Bond market is very tricky. Today, the bond market was very active in weird ways. The TLT needs to spike, otherwise we have a rate hike coming. So I wouldn't short the TLT. Would you go long ZB? I mean, it's an active. I don't go long overnight on futures, so I would trade ZB bullish and bearish. Neve, Beto, Nick, what? I'm out of my Beto. I wouldn't get engaged with Beto up here. Today, crypto did catch a bid, but not enough for me to chase it. You're getting the dividend payouts, so that's pretty good. And what else? All right, one more time. On the upper right-hand corner of my screen, you can see it, that QR code. That QR code is your ticket to understanding charts. 25 spots open, not anymore. We had a few sign up. You can even click, you can go to simplestocks.net, May charts or events tab has a link to it, or the QR code should take you there. Questions? We have 5 minutes. 5 minutes, because it took me 5 minutes to start talking charts because I was focused on the event. More questions? I'll scroll up. When should you sell a put, Neve? Okay, so when should I sell a put? If I want to own the stock at a lower price? Yes, you need to. So the question, when? The timing of when is whenever you think the stock is a good long. This one, so I sell puts usually when a stock is falling into its support zone and I want to buy shares. Instead of buying shares, I sell a put. Some people sell puts to trade. That's fine. But when markets are all-time high, that's dangerous. Again, this was not an invitation to advice to trade. This is me showing methods. So nothing specific right now. All right, folks. This is perfect timing. I don't want to keep you long. It was a stressful day for people, but we had a lot of fun. Most of you I'll see tomorrow. The new people that are not members, check us out. We kick Wall Street fanny every day and have fun at it. All right. I'm going to rudely end it as I do it every day. 5, 4, 3, 2, 1. Goodbye.